Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. And I do say happy Monday. I know there's all sorts of crazy selling and emotional reactions. And if I take a look at my Twitter feed, everyone's a tariff expert now. Who knew? Who knew so many of my Twitter friends were such tariff experts? I am, in fact, not a tariff expert. My job is to find opportunity. My job is to manage risk. And if you're watching this show, that's probably your job too. My job is not to pick a bottom or top and tweet about it, get on television about it. I'm not even going to say here that we have a game plan for what kind of price action we're going to see over the course of the next few months or few weeks. But what I do know is history, and I know you do too. And I'm trying to get this image to size in a way that we can all take a look at it. This is the SPX, all right? This is 40 and a half years of the SPX. And, a lot of folks say, Rog, the volatility is so much greater. Well, remember, a 1% or 2% or 5% move of a thing, in this case, the SPX, that is moved from 1,000 to 2,000 to 3,000 to 5,000, whatever the number is, right? If you're looking at the Dow, the Nas, the S&P, the Russell, by percentage, the point moves are going to be greater, right? And we do have a lot more reaction, mainly because probably as compared to even maybe 25 or 30 years ago, we have much more retail participation. I'm not blaming the volatility on retail. There's plenty of people selling. You can see that circuit breakers have been hit all over the globe. But this is one of many, many, many sell-offs, if you've been trading for as long as I have, that you've seen. I did not trade through Black Monday. That was a little bit before my time, but I did trade in my dorm room through Gulf One. I did see a lot of these. I remember trading actively futures during the Asian crisis and the ruble crisis. I remember when long-term capital management imploded. Now, if you remember any of these, go back to 2008. Maybe your first reference for panic was 2000, 2001. The story might change a little bit. The reason might change a little bit. But what it looks like on the chart's pretty much the same. There will be, for a period of time, a lot of fear. But as they say and have said for many years, Wall Street's the one place they throw a sale and nobody comes. The idea here is to have a plan of what to do with these volatility events. So forget the reason. The plan is what to do with these volatility events. So based on experience, this is what I'm looking at right now. Let's bring up the charts here. And you'll notice that I'm spending a lot of time on multiple time frames, right? I don't use multiple time frame confirmation. I'm not looking for the 5-minute to agree with the 1 hour and the 1 hour agree with the daily and the daily to agree with the weekly. That's not the job for me. My job is to look at these four things as if they're four different slices of psychology. Each one represent a certain amount of psychology. It could be very near term, it could be very long term for a particular symbol. And then my job is to say, well, which one can I manage risk on? Which one's giving me a setup? Which one has the kind of structure that I can take advantage of? And right now, the two places that I keep going to are either very, very short term. It could be a 5-minute and look at a today trade, a day trade, or it could be a 1 hour and look for a time frame that might be today to maybe 3 days, maybe 5 days out, or jump way out to the weekly and say, hey, there are levels that I wish I could have bought the S&P at. Was I going to chase it higher at 6,100? No. What are the pullbacks that we can take advantage of? Is this above average a pullback? Yes, we have now entered the 20% pullback on so many stocks. Obviously, this is true. And when I get into the different videos that I'm going to do with you all this week, this is not something that's going to V-bottom out. I'm not looking for Jerome Powell to come in and enact a number of things like sudden monetary policy shifts, like what he did from 2018 Q4 to 2019 Q1. I'm not looking for the kind of action they took in 2020, driving the interest rates down to nothing, empowering the Treasury to buy stocks via JNK and HYG. I'm not looking for a scenario like that. We're not looking at a V-bottom scenario here, gang. What we are likely looking at is a slightly prolonged bottoming type pattern. It could be a 1, 2, 3, which is just a variation of kind of a W double bottom type pattern. but it's likely going to take a little bit longer. And the length of time it takes for traders to change their minds is what the length of time typically is. So in a V bottom scenario, traders change their mind very quickly because the monetary policy or the actions taken by the Federal Reserve or the Treasury were very sudden, and it was clear this is the path to the upside. The Treasury was buying junk bonds and high yield corporate. It sent a signal very quickly, very sharply. This won't be that. This is not shaping up to be that. So don't look for that V bottom, save the day type thing. So that gives us some time, which, believe it or not, is good. And I know this is going to sound simplistic, but a lot of folks are saying I'm losing money. And I remember my first mentor telling me something during one of my first epic sell-offs in stocks. He said, you only lose money if you sell. So those of you out there looking at your 401ks, don't, right? If your time horizon is years, if not decades, right? If your time horizon, and I know this isn't going to apply to everybody, but if your time horizon is years, if not decades, this is a blip, right? History shows us this is a blip. You only lose if you sell. And that's what I keep reminding myself. Yes, I have positions that are longer term position trades that I'm likely going to have to let go at their predetermined stop loss because they're not mature enough in terms of cost basis to have been bought with a low enough price years ago to be able to handle this volatility. And that's okay. But that's going to be targeted risk management. That's not going to be, I hate the analogy, but it's true. This is not going to be throwing the baby away with the bathwater. So if you're lacking a plan, start with history. Start with what's happened before. Take a deep breath and start with that. Now, if the trading is going to be a little bit more difficult, look, this is nothing like last year, right? We're hitting all-time highs. Q1 was probably one of the best quarters we had in years of 2024. Q1 is probably one of the most difficult quarters in the last 12 months, and Q2 is not shaping up to be any friendlier. But before you get angry at things that we have no control over, just again, go back to history. I'm looking right now, and I'll share this tomorrow because I don't think I have this saved on my desktop, or do I? I'm trying to find this one image, and I'll definitely share it with you all this week at some point, where there are certain patterns, there are certain rhythms. Here it is. I think this is it. Okay, this is a neat image, and this is not my image. I saw it online, thought it was kind of neat. This is S&P 500 stocks above the 20-day moving average, or when, in this case, when they're below. Take a look at how many times we've seen this. This is 2022, 23. Remember the regional bank crisis? That was the beginning of the end. 2023's correction, April of 2024. That was when a handful of rogue FOMC members, in light of expectations for a cut, started talking about hikes at the beginning of Q2 and pretty much undid the beauty of the Q1 rally. All right, there's another one. So again, I'm just going to look back at patterns. Now, patterns alone, like seasonals, are not something I'm going to follow blindly, right? This is not something I'm going to follow blindly, but I know the structure based on historical patterns tells me now's the time to at least build a shopping list. I know for a lot of you that may not have seen this before, it's a really easy cue. And look, we've all been there. The first time I traded through a war, Gulf One, I hadn't seen anything like that before. But part of trading is just getting the reps in, and some of that is just whatever the market's willing to present to you. Traders who have only traded through a bull market, traders who've never dealt with volatility, this is going to feel fairly awful. For those of you that have said, Rag, I've seen a version of this before, I'll tell you a story. I know I've said it in the Sector Secrets Mastery, but it's a good one. I don't know if it's true. It doesn't matter. But this goes to tell you experience versus building experience, right? So one of the epic crashes like this happened. And two brokers were supposedly talking to each other, talking about all their clients that were phoning them up. So this gives you an idea. This is a while ago, phoning them up, panicking and telling them to sell everything. And this might have been 87. These two brokers were, so figure like an 87 type chaos. And he said, everyone's telling me to sell, 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 sell. Okay. He said, I had two clients that said, buy everything, right? When the markets were slowing off, I want to get long, buy me stuff. And he said, it was interesting. I asked him why. They were the two of maybe the 80 of the clients in this story that weren't panicking. And they said, I've seen this before. right? And I think they were both old enough in this story to have seen um, the original crash, right? That everyone talks about, not 80, not 86, but they've seen it before. We know how this usually ends. May not be pretty, may not be immediate, but their answer was we've seen it before. If you're talking to a trader like myself who's seen it before, believe me, I'm not trying to be jovial, but I have a plan, and that gives me confidence. And I'm trying to give you all the plan too. Maybe the plan is to be bearish on the 5-minute time frame. Maybe the plan is not to take overnight positions because, geez, look at this stuff, right? I get it. Maybe the plan is to say, look, I've been wanting to put some capital to work in a longer term portfolio for a retirement fund, for my kids' education, whatever, right? This is how it works, right? This is how it's going to oftentimes look like a sale. I know most sales are fun. Prime Day is a lot of fun. This is like Prime Day. This is Black Friday, right? Everyone says Black Friday versus Black Monday. I'm not going to call this Black Monday. It's Black Friday, right? What is on sale that in the coming weeks, maybe months, I'm going to build a portfolio knowing that 12 to 18 months forward, history has told me. I'm a big fan of history, right? I double majored in English and psychology in college. Sometimes I wish I'd majored in history because history is a heck of a teacher. And if you haven't had experience for this kind of stuff, you can go back into replay mode in a number of charting platforms and sort of jump into H.G. Wells' time machine and play back those charts. And that's a really great way to not be there. The emotion won't be there, right? But you can kind of reenact what that looked like, find those patterns. Those are the patterns that I'm going to rely on. And I'm showing you a few of them right now. And I think I have to sneeze because clearly I'm allergic to this too. Believe me, I don't love this. All right. I don't want anyone thinking I love it, but it is useful if you know where to look. So I hope, I don't want this to be a pep talk. I want there to be a little bit of a tactical idea for, okay, Rog, I hear everyone. Everyone's a tariff expert now, right? Everyone's a tariff expert. And, I'm not. That's okay. I don't need to know a darn thing about tariffs. All I need to know is the psychology, if you want to even get a little bit more inside baseball, the sociology of panic and the way that it plays out in stocks. Because at the end of the day, each one of these candles is a group of people. And right now, these people are freaking out. But if I can put some lines on the road, if I can say a 20% pullback usually is a great place to start looking for those bottoming patterns. And it's a whole lot better after 20% to look to buy the SPY than at all-time highs. No one balks when they say, hey, buy the new high. People just drive on in, right? But when it sells off, is the stock market that different a place now, all of a sudden, than it was 6 months ago? Or is there an event that's affecting them, and then that event creates emotion? Yes, you might say, Rog, there could be all sorts of forward implications for these companies and for earnings and things like that. Earnings have never been the reason stocks go up or down. All right. If someone's out there saying earnings, please, that's not ever been the reason. It's monetary policy. And if even more basically, it's liquidity, right? So right now, we're waiting on the Federal Reserve to cut in June or July. That's what's in the Fed fund futures. That's what's in the data. Please look at this chart. This is an updated chart from the folks at Koifin. Now they've added in the tariff war volatility, right? Please know, this movement in here, this was worse, right? This was worse than what we're seeing right now. We've seen this, right? If you've been around for a minute, you've seen things like this. So don't let people scare you. Oh, this is '08. We recovered from '08. Fortunes were made on the recovery from '08. So get opportunistic. All right. So let's go ahead and take a look at some questions. And hopefully remember that there is opportunity. We can either, we can either help ourselves and people we know to the lifeboats, right? Or we could rearrange the chairs. There's a lot of chair rearranging on the deck. All right, if you know what I mean, making my Titanic analogy, there's a lot of rearranging of chairs on the deck, a lot of outcry. Let's just get to work, right? Let's trust what we see on the charts, volume, volatility, time, and price, and do what we'd always would do. Yeah, it's a little bit more chaotic, but there's a great line from, I think it was Bull Durham, and Kevin Costner's character is saying baseball is a simple game. You throw the ball, you catch the ball, you hit the ball. Sometimes you lose, sometimes you win, sometimes it rains. Right now we've got a hurricane, but it's still baseball. All right. Okay, so let's get to it. How do I view Archer Daniel Midland? after this sell-off, look, if I could start to Tennessee, if I could start to build a wish list of stocks that eventually I'm going to look for setups in and then buy, yeah, dividend yielding stocks would absolutely be high on the list. But Archer Daniel Midland for this longer term, 12, 18-month type outlook, not where we are now, right? Where are we going to be, right? So if April of 2025 looks awful, can I imagine for a moment what April of 2026, what maybe, think 12 to 18 months, right? What could October of 2026 look like? And if you're thinking, Rog, it looks awful, you're not going to want to buy, and that's okay. That's why I show you those historical charts of the dips and the recoveries. But Archer, Daniel, and Midland would not be something I could put on that list. I'd have to find something else, Tennessee. Things like NOBL would be a really great place to look. That's a dividend. It's a ETF of dividend yielding stocks. But Archer Daniel would not meet the criteria. In fact, on the weekly, it's in a downtrend. And Archer Daniel Midland is not struggling because of what's happening in the last 6 weeks. Archer Daniel Midland's been kind of a disaster since end of October of last year. So it's got its own journey. It might be worse now because of what's happening, but it's already been weak far before the melee began. So I would pass on that for now. All right. Next up is T-Man says, Raghee, I like you finishing up saying be good to each other, gang. Reminds me of my childhood. Look, we're retail traders. I don't have a trading floor here. I don't know if you can see my dog. She's laying on the floor behind me. Can you see the pup? I don't know. It's me and it's my group of traders in the Sector Secrets Mastery. And the way that I look at it, it's us against the world. Find a community. Maybe it's Shirts and Coffee. Maybe it's another room, wherever it is. Find a community. That's what Sector Secrets is. And we say, look, those of you that have never seen this before, this is what's happened last time I saw this, right? We share the experience. I have traders in the room that have been trading for 10, 20 years. And they'll tell the newer traders who are freaking out, look, we've seen this before. This is how we manage. Yeah, it's going to be really uncomfortable. So it's not just me. But then we say, look, where is the opportunity? It's easy to panic. The panic button on a human is the size of a tractor tire, right? But the opportunity button, sadly, is hard to find, and it's the size of a thimble. But we got to find it, and it is more work. But then again, if this were easy, everybody would do it, right? I remember, and let's see here. Yeah, this is my Titanic image. Let's choose to be a little bit more optimistic, right? And with that, we can find opportunity. A happy brain, right? I'm not saying to be happy about this, but a happy brain is somewhere on and I've actually read the science on this, is somewhere on the level of 30% smarter than an unhappy brain. So if nothing else, it's more profitable to look opportunistically. Your brain will operate, my brain will operate better if happy than if sad. So if that's not a reason to look for opportunity, I don't know what is. All right. What would be a good level to look at for Nvidia? Sure. So again, I'm talking more weekly time frame, not daily, not hourly, not 5 minute. I'm bearish there. On Nvidia, I'm probably still going to have to wait a little bit. I've got more than that 20%, right? But Nvidia was pretty darn inflated. At some point, maybe when a little bit of this melee is settling down, I did a little research on basically what you could consider the 4, maybe 5 layers of AI, and it's kind of an interesting little bit of when I'm looking at this kind of stuff, I'm not happy either. But I try to say, Rob, let's go start the research process. Let's go get some fresh ideas. Me and my best friend Perplexity get to work, and I started looking at the different layers of AI, and so it's not quite time yet, but what I'm going to start looking for is a pattern. Look, 92 is not out of the question. That area between 90 and 92, but I would still need to find a pattern there. It could be an inside candle. It could be a minor low. It could be a volume level and a mean reversion. Likely I'm going to start to use the tool that I created back in 2008 to say, look, how do I coattail big money, right? And that's where I start using volume-based tools like my V-score. And that's where I'm going to have to go back in history and say, when we've reacted like this before, now let's track where the volume starts to come back in as support. And that'll be the game plan. So thank you very much, gang, for being here for Charts and Coffee. If you're here There's that part of your brain saying, Rog, I want a plan. I don't have one yet. I want a plan. So kudos, because most folks are just panicking. It makes you the elite of the elite. All right, gang. So I'll see you tomorrow, same time, same station. We will get through this together. Many of us have seen this before. It's our job to share with you all. We've survived it. There's opportunity here. I know it may not feel like it, but go back, trust history. It may not rhyme, but it may not repeat itself, but it sure does rhyme. Be good to each other, gang. I'll talk with you tomorrow.